29 or an advancing of that cut to some time between the meetings. Mid-cap index as well 1.2% higher. Advanced declines are a very healthy, almost 5 stocks in the green for 1 in the red. And in this clement scenario, let's welcome N. Jayakumar, President of Prime Securities, to talk to us about the markets.
Morning.
Hi, Jakes.
Hi.
Thank you very much for dropping into the studio. What is the sense you're getting? Is 8,300 thereabouts a very good support for the market under the circumstances?
I don't know if it's 8,300 or 8,100. But I think in this range, and we've tested 7,900 recently. So my sense is in the 8,082 range, there'll be enough reasons that you'll get for people to add to India, as it were, and say 7, 8, 10% higher, 87, 8,800, or even a little shy of that. So the market is trying to get out of this range, but I think it's not impossible that the market could spend fair amount of time sort of churning in this. But I think what's really critical and significant in this is that the market is making new lows in terms of stocks with as much gusto as it's making new highs. In fact, so I think this is one of those absolutely different kind of bull markets where in the same space you have two majors, one making new lifetime highs, one making new lifetime lows, and you can virtually go down, without I can't talk stocks, but you take the automobile space, you take other space. It's very, very evident that one or two factors are just completely changing people's orientation, and maybe money begets momentum, momentum begets money. So it's that virtuous cycle, or where value gets sort of pushed out, and things sort of just go from better to even better. So I'm reminded of this, this nursery rhyme about when the girl in the nursery rhyme was good. When she was good, she was very, very good, and when she was bad, she was horrid. So people are viewing stocks like that. So if it's good, it's going to continue to get better, but if it's bad, it's kind of going to go into the pits kind of thing. So I think it's interesting, but we're making a very differentiated kind of bull market, if you will. And it's a bull market because there are many, many highs that are happening as we go along. But there are equal number of lows, and I think that's the big takeaway, at least for me.
Okay, widening of the gap between the rich and the poor, as it is called.
Well, I guess
the good and the bad.
The good and the bad. But Jakes, hi, morning. What is preventing this market from, breaking out of the range on the upside? Is it the lack of earnings? Is it the fact that some of the reforms like GST are not coming through? Or now is it, higher amount of global turmoil in the form of yuan devaluation, etc.?
See, I think we have to, the moment we come out and say, as a lot of people have been saying, that we are a differentiated country, by definition, somebody or the other will keep creating problems. So if China, the big elephant in the world, as it were, is not able to get its act together, I mean, just see what they have done over the last several years. They moved from, say 10 years ago, from a pure export-led, then they went through to the extent of saying ban the one-child policy, then they went into consumption, and they said now China is going to consume everything in the world. Figured they couldn't consume, now they seem to be devalued to go back to exports. And the problem is, in decisions in China get taken literally at the toss of a coin. There's a meeting this evening, next morning there's a complete change in track. So I think the problem is we aren't able to say with any degree of certainty what growth rates in China are. We know the published numbers are not entirely kosher. We know that they're not consuming adequately. We know that commodities are collapsing. So the problem is, the problems in China are getting bigger. A lot of it not known, but more importantly, with this devaluation round, I certainly don't believe the fact that they're going to stop here. So this is going to continue, which means in a competitive sense, so what happens in China happens in India with a one-third kind of impact. So if they devalue 4%, you'll have a 1.5% devaluation in a sense here. So the rupee was stable at 63.5, which actually prompted the governor to say that the rupee is probably in fair value zone. And this is the first time he's made a comment like that, to the best of my knowledge. And suddenly that 63.5 is now probably 64.5, 65. So that 1.5% is the equivalent of the 4-5% in China. And that's the kind of, so we have a moderated impact. But this impact, if you now translate to companies and sectors, I think IT and pharma could be huge beneficiaries, because this is a near permanent move up. And with the government more and more pushing, giving incentives for exports, which I think they need to do. And I have a take on the government, which I'm sure we can discuss in a few minutes, but what they could or could not do. So I think these near permanent changes in the exchange rate are giving benefits to these two big sectors, which I think will actually be the ones, if you're looking for exports to pick up, it has to be ultimately these two. And there again, I mean, you see the pharma space, the big three will not remain the big three. There's a huge churn, business models are changing. So again, those are specifics, but staying with the China theme, I think that's the big thing. I, for one, do not believe that China is done with it. I mean, look at the problems they have on their hands. They don't know when the markets were to open, if they were to open, what kind of losses they'll have to bail out in some form or the other. Accounting being is a separate issue, but they clearly will have to take hits for hits that public or corporates are taking. Two, there's problems in the banking space, problems in the real estate space, there's problems of asset bubble, consumption is not there. So I don't know how this is going to play out, but I think it's going to give a premium to information right now. And people get little information, they magnify that and do a lot. As is seen, for instance, in the case of automobile companies, which cater to that, to that market. Anything to do with China today is seen as one huge uncertainty. And I think that fear is kind of getting magnified in terms of things happening.
Okay, so your bets in India, outperforming bets, would be IT and pharma.
Absolutely. I think even in pharma, I think, you must understand, I think pharma is at the stage because, all said and done, we may be uncharitable about this, but a lot of the IT is still labor arbitrage. And that will change as pricing changes. And, many countries are coming in. English is not the domain of just India and the UK, as it were. So, language is not a barrier. So, in the pharma space, I think it's a lot more than just labor arbitrage. I think the Indian companies are moving up the value chain. Companies that are getting into new areas, whether it's in terms of complex generics, in terms of more specialty generics, but more importantly, areas like nutraceuticals, areas like medical foods. So there is definitely, and research, which is a bit of a black box, so I can't really talk about it. But if you see, even the top 4 or 5 companies are not announcing all secular growth numbers in all markets. I mean, amongst the top 4 or 5, acquisitions are being made where we're paying top dollar. And Allegron being, acquired by, let's say, Teva, for instance, is not, and if you look at it, it was a $6.5 billion top line, not incomparable to some of the Indian pharma majors. So I believe the consolidation is on. This entire thing about affordable medicine, which is a policy announcement which has happened in the US, is going to mean that generics is going to be big time in focus. And I think IT, where it was in the late 1999-2000 period and early 2000s, is where pharma is today. So I'm talking about a very, but there you have to be more differentiated. I think we can't just look at companies acquiring with gay abandon because people are overpaying in the short run, given the fact that they are not able to, I mean, even this entire thing about, big IT, big pharma majors acquiring others, I think they're replete with problems. So we need to be a little differentiated here.
So this morning, everyone is only talking about the possibility of an early rate cut because of the way the inflation numbers panned out. Right. And a lot of banks are moving up because of that. Would you pin your hopes on an early rate cut? And is that a trigger enough for the market to move higher?
I don't think it's a trigger enough necessarily, but in terms of a rate cut, I have no doubt in my mind that we'll have a rate cut well and truly before September 29th. See, the one thing, Lata, and you will sort of bear out people, the RBI or the Reserve Bank, the governor can be, in a sense, doing what is traditionally acceptable. If everybody else in the world is moving according to traditional metrics or traditional logic. But today, for instance, if people are thinking out of the box and doing things which are very different in terms of either, aggressive quantitative easing, countries wanting to increase rates, not being able to do so, I think some out of the box thinking needs to be brought in to somebody who I believe is one of the brightest sparks and somebody who I've known for 35 years, and I have the highest respect for him. But I think maybe one needs to be a little more creative in times like this, is what I personally believe. And I think the rate cut comes well and truly before, because I think we've, in a sense, needed it and deserved it. Not because in India, I mean, trying to wish away corruption or wish away inflation in India is like Don Quixote and the, the windmills, as it were. It's like, fighting ghosts. These will remain. So at best, what you can do is you can try and have processes that overcome this. So really speaking, I think inflation will continue at whatever pace. We'll keep getting excited about numbers and may not about at other times. But I think the rate cut is long overdue. That's not a trigger, but that's one of the several things, several bows in the quiver, as it were.
Okay. I spoke to Rangarajan a couple of days back, and he strongly supports Rajan's inflation attack. Believes that we get to 4% or we will become seriously uncompetitive globally. So anyway, separately, so you don't buy PSU banks?
No, in fact, I do it because that's one of the areas which is my pet peeve, that the government today, you know, you can go to the floor of the parliament and keep screaming cockroachy and keep screaming other things. That's irrelevant. To my mind, we have to focus and lose our night's sleep on what we can control, which we are not doing. So, for instance, we know that PSU banks need, at the end of the day, capital. What's the point in, you know, in a sense,
It's been given
tinkering
now a little more than previous.
That's what I'm saying. We are tinkering at the edges. Let's take the first step forward and say the top 3-4 banks, they need 15, 20, 25,000 seems enough. We are giving it 50,000 crores. Because if the bulwark of our economy is the banking space, you've got to overcompensate. That's it. By the way, you know, interestingly, to spend, you know, a crore of rupees out of budget, you need approvals. Here, to capitalize by 50,000 crores, there are no approvals. Is the ruling party just increasing its purse allocation in a sense? So all I'm saying is overcompensate that. Go out there and put, because let's see what the private sector banks have done. They have consistently increased book value through issuances of capital at higher and higher prices. And the stocks trade at 3 times book and 4 times book. What prevents a State Bank of India from trading at 1.5 times book or 2 times book? And therefore attracting more money simply because now it's trading at that. I think we need to understand the psyche, which we are not. So we should overcompensate, and that is what I believe.
Okay, Jakes, we'll have to leave it at that. Thank you very much for joining us.
Thank you.
Busy earnings season, so a lot of corporates as well to discuss.
Thank you.
Very much for dropping in the studio. Well, as we were speaking, the markets have trimmed a little bit of the gains. The Bank Nifty is still high, but not 1.5, it's 1.25. The mid caps are still higher, but not 1.